know, and there's many geographies where Facebook is not even close to you know, the dominant you know, China as an example. I wouldn't expect it to be. I would expect Whitney. What's the Chinese social media site? Weibo?
Yeah, Weibo, and there's, you know, Baidu, Alibaba, and that gets to one of the questions actually on the chat line. A couple people have sort of said, you know, long-term future, how do you think Google and Facebook compete with the Chinese giants, number one, in terms of the international growth opportunities? You know, could that be a headwind for them? And then two, how would you compare, you know, Alibaba stock looks cheap, Weibo stock looks cheap, you know, the Chinese companies have come way back down, you know, how might you compare those investment opportunities? Any thoughts on those?
Yeah, so let me just finish up with Michael. I think that the you know, there is plenty of stickiness to these platforms. So there's a huge value embedded in the United States. The stickiness in the rest of the world is less and growing, and the opportunity upside is growing. You know, out of those 2.3 billion users, you know, the majority of them are outside of the United States. So to get the sort of growth numbers that we're thinking about, you don't need a whole lot more upside there, plus the organic U.S. growth from the incremental advertising spend and their other products. So, you know, in situations like this, we're not trying to pinpoint intrinsic value. We're trying to pinpoint that it's going to be worth more in 2 years, because, and if we're right in the growth, you know, that's not even close to suggesting they're going to get to $28, you know, per quarter in the rest of the world. But I don't know where it goes to. I do think that, you know, the prospect that it's 50%, it's a 50% larger company in 2 years as a result of those factors, I think is pretty high.
Pretty high.
And that's where that's sort of where the calculus comes from.
Right.
Major Asian competitors, I would say that the stickiness in the U.S. of Facebook, you know, is the same stickiness in Asia for the social media people that have the first mover advantage there. So I think that market shares today for the existing platforms will more than likely perpetuate. So, you know, I don't think that a Chinese social media company is going to do particularly well in the United States supplanting Facebook, but I don't think that Twitch is going to supplant Huya in China. So I think it's a much more broad, complicated question to get involved in the valuation of the Chinese companies. I personally have an issue with the corporate governance associated with those companies, not the least of which is you don't own a share of the business. When you own a piece of stock in Alibaba, you own a share of an intermediate company that tracks the stock. So that's a little bit more far removed. And in bull markets, that doesn't matter. In bear markets, that's a huge issue. But I'm not particularly prepared to, you know, to opine on Alibaba other than the fact that it's a lot cheaper than it used to be. You know, same thing with Tencent. And if I was going to be dipping my toe over there, that's where I would be going, is in the mega ones that have been cut way back. But when we looked at Alibaba a couple weeks ago, Whitney, you know, yeah, it's way down, and yeah, it's not cheap.
Yeah. I'm almost, I'm just pulling up, let me show you guys what I'm looking at here in terms of Capital IQ, and, you know, just taking quick looks at stuff. There you go. So let me first just highlight a couple quick things. Here is one thing to look at is in terms of thinking about future growth potential and all. Netflix here has $15 billion of trailing 12-month revenue. Facebook is $52 billion. Google is $130 billion, right? So, and then Apple's, you know, $260 billion. So roughly speaking, Apple has double the revenues of Google. slash Alphabet, Facebook. Google is 2.5 times, almost 3 times the size of Facebook, which is in turn triple the size of Netflix. So one of the things investors are thinking about is size is an anchor to growth. Netflix is just has I would argue has a much longer, higher percentage growth runway than the other ones. Facebook is sort of second. Again, it's just smaller. And there's still so much room to monetize. And I would echo what Glenn said is, the Chinese giants have grown out of a completely protected market in the largest population country in the world. But almost no Chinese companies have managed to successfully sort of innovate and develop brands where they've been able to be real successful going outside of that completely protected market. And so my money is as the second half of the world's adult population gets a smartphone, mostly in lower income countries, India, Sub-Saharan Africa, Latin America, I think they're going to be getting Android phones, not Apple phones, and virtually all of them are going to be using that suite of 7 Google products that have 1 billion MOUs monthly. And I would bet almost all of them are using Facebook. It's not clear to me that they're going to be buying many Apple phones. I think that that becomes a much slower growth business, more of a replacement business in the developed world. And it's not clear to me that Chinese giants are going to be really monetizing, Latin America, Sub-Saharan Africa, or much of India. So a quick look here. I'm just going to pull up Alibaba and just, because I know some people who like this, and just let's take a quick look at it real time. I haven't prepared any slides on it or anything like that. So Alibaba, the stock has come, hold on just a second so I can see my screen here. So the stock has pulled way back at $136. It's come down from $211. So, it's down by 40%. Still got a big $350 billion market cap, 40 billion of revenues, trading at 9 times revenue. So that's the highest revenue multiple of any of the ones we've seen. But really, really profitable. 39 times EBITDA, 43 times earnings. So I don't know. I've always viewed China as too hard for me. It's outside of my circle of competence. I know too many people who've gotten defrauded in China. So I don't know. Let's take a look at Tencent. There's a way you can own Tencent through a South African company called Naspers. That's a very popular way to play it, by the way. So Tencent here, again, like most of the Chinese companies, stocks down here 40-something% from $61 to $34 a share, 40 billion in revenues, trading it at 8 times revenues, highly, highly profitable. I think they're interesting. I sent you guys the write-up of Weibo that was just posted on Value Investors Club. I think they're interesting, but it's just like, wait, I can buy Google and Facebook, which I think are much better positioned to capture that international growth outside of China. And they're trading at lower revenue multiples. And I don't have all the China risk. The Chinese government, if one of these companies sort of falls out of favor with, for whatever reason, with the Chinese government, there's just such tail risk there that there's a little bit of tail risk with Google and Facebook, and the European Union and or the United States could take some regulatory action, but I would argue it's nothing like the tail risk of the big Chinese companies, or of any Chinese company, honestly. Let's see. Daniel writes, Baidu, some challenges, but 18 times PE. PEG of 0.88. So let's pull up Baidu and just take a quick look. So Baidu, like most of the Chinese stocks, is down, 35%. It looks like 183 down from 284. It's much smaller, $14 billion in revenue, trading only 4 times revenue, 12 times EBITDA, 15 times earnings. So certainly looks cheaper. Do you have anything? Do you have any, Daniel or Philip? You have anything you want to add on Baidu? I personally have never really spent a lot of time doing a deep dive on the Chinese companies, just because I felt real circle of competence issues, and I know too many people who've gotten blindsided there. Michael, do you want to have any comments on that? I noticed your video's live.
No.
Okay.
No, I just don't. I think it was left on after I had asked a question of Glenn.
Understood. Okay, I'll put you back in the queue. Any other thoughts, Glenn? By the way, the sun is coming through your window and putting funny spots on your face. Anyone else have any other chat questions? Let's just review the chat line, Glenn. I'm reluctant to launch into another big module with 6 minutes left of our session today. I thought it was fun taking a look at both historical and current tech stocks. Let's see. Glenn, did you have any comment, Michael, or maybe you already covered this and I missed it. Are Europe and Asia's lower monetization growing at the same rate as the US was at the same time in their maturity? I've never gone back and tracked that. That'd be an interesting project. In fact, I'm going to write a note and have our analyst, Kevin, go back and see if he can produce a nice little chart. And it would be sort of cool to see that Europe is on the exact same trajectory in terms of monetization that the US was, 5 years ago. Anything you want to add to that, Glenn? You're muted.
Nope.
All right.
But I fixed the sun.
Okay. Let's see here. Let me then just put up just the next module that we'll start to cover next time, which is value traps. So we're going to pivot from looking,